Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hey, welcome everybody. Welcome to another edition of Toolkit Tuesday. I'm Dave Eckton. I'm the director here at the Louisville Small Business Development Center in Louisville, Kentucky. Thanks for joining us today. Always glad to have everybody. I'm also joined with my good friend and coworker, Janet Flaw, making some faces there.
Sorry about that. The buttons weren't working properly.
Yeah.
Hi, Dave.
Janet runs the show for us. She takes care of all the good stuff back there. But just because we always want to make sure everybody can hear and see us well, look at the bottom of your screen there, you'll see a toolbar pop up. If you don't, hover your cursor over that, and it should, and you see the little chat button. If you just click the chat button there and just say hello and tell us where you're joining from, so we can make sure that everybody can see and hear us well. So I'm going to say hello. I'm here in Louisville, Kentucky. See who else is out there. This is the funnest part where I get to see where everybody's from. We have people that join from all over the country sometimes, so it's always really interesting for me to really see where everybody is. So right now it's just me and Janet. Janet's up in Sellersburg, closer to the North Pole than we are here in Louisville, which is okay. Let's see. And there's Jerry and Lakita from Louisville. Sean, more Louisville. Hey, Kiara. Keith, how are you? We worked together on Saturday. Good to see you. Hey, Kristen, Louisville. Patrice in Louisville. Looks like everybody's from Louisville today, except a few of our Indiana folk. So, yeah, so thanks for joining us today. And as we go through the presentation today, if you have any questions or comments, just put them in the chat. We'll be watching that and we'll get right to them. So today we're joined with two great guests from Guardian Chamber, Jerry Vaughn and Sean King. And this is a question that we get all the time. And this is why we're so fortunate to have these two guys here with us today is, you know, the main thing about starting a business or even growing a business, everything costs money, and often you have to finance the growth and the startup, and you will have to most likely access debt. And so this idea of establishing business credit is key. And it's kind of can be difficult, but if you have the right resources, the right folks behind you, not so, it's easy to do so. Jerry and Sean are here today to talk us through the whole process of establishing your business credit and moving your business forward. So welcome, Jerry. Welcome, Sean.
Thank you. Very happy to be here.
Thank you. Very excited to be here to give you guys some information, give you some nuggets on how to truly build that credit, not on you, but on your EIN, that tax number the IRS got from you, because I know we all think of the IRS, right?
Right.
Boo, we don't want to pay that tax. I can't help you out with that. Hopefully you got a good CPA or accountant, but we're going to show you how to take that thing and add a jetpack on it to really fuel your company's credit score to help you get access to capital credit, best rates and terms.
Yeah, that's what we want to know. So I'm going to just turn over to you and let's just jump right in there and get started and get the information out there so we can all do this.
All right. I'm going to share my screen with you all now. So hopefully you all can check in and let me know that you can see the screen. If you can let me know that, Dave, I'd appreciate it.
Okay.
It says it's sharing, but I don't see anything yet.
Yeah, it's still dark, yeah.
There you go.
Can you see it now?
Uh-huh.
All right.
Perfect.
So how to grow your business, thriving versus surviving. And we are dedicated to Main Street business owners, not Wall Street. So at Guardian Chamber Business Solutions, I'm obviously the founder and the CEO, and Sean's our director across the great state of Kentucky and across the country. We have a whole team that are here to get out and educate, build relationships to show business owners, just like all of you all through the SBDC here in Louisville, Kentucky. So we want to thank Janet and Dave for having us on today. So thank you again. So let's talk about the 3 problems that you have as a owner, right? So these are the things that we found for over 10 years working with you all. Getting access to capital and credit without leveraging what? All your personal assets, your social security number, because when you do that, what happens to your personal credit score? It goes downhill. Cash flow and debt management. How do you do that? We use QuickBooks or bookkeeping software, but that's really, it's expense tracker. So how do you forecast that? How do you set your business succession plan up properly? And then the last one is time. Anybody have that problem? Anybody like to get more time? How many you're in the business? How many are on the business? And those are the 3 problems that we help solve across America here at Guardian. So let's give you some facts, just giving you a lot of education today so you guys have the information that you need. This may not be you, but this is according to the Small Business Association, right? So if you look at it, 49.7, so only half of the businesses make it past 5 years. Why is that? Cash flow, getting access to it, they can't grow and expand, or they run into a storm or a dry month and they run out of money. When they're done, they're like, hey, I'm an LLC, I'm an S Corp, I'm a C Corp, so I'm good. We have that corporate veil, which we're going to talk about today to give you guys some more fuel to understanding how that exactly works and protects you and how you can get access to it. But even when they close, you still owe $83,000 on yourself personally, because you're doing what? You're personally guaranteeing or putting your social security number on those business credit cards and loans. So even though your company's out, you're on the hook for that. No different if you guys co-sign for one of your children and they didn't make the car payment, you're gonna have to pay that off. Okay. So this is the big factor that we're really passionate about here at Guardian. Did you know that 75% of small businesses don't make it past 15 years? Only 1 out of 4 make it. There is a better way. Glad you guys are here. So let's talk about some of the challenges that you guys have, right? So if you look at it, why don't we change our mindset? We kind of get in a groove. We just came out of the pandemic. Now we've got inflation, an economy that's soaring high, debt in the country, fear of the unknown. We kind of just say, hey, we stick in our lane. We're too busy. We talk about time. We have family activities. We have business activities. We just don't have the time to invest. And we're not even on it because we're so fueled in being in the business because it's our baby. I'm a business owner, just like you guys. I've had 5 companies, right? Don't have the money to start or run your business. So you're using your own cash flow to dump back into the business, not helping myself prepare for my exit strategy. Hey, this is just the way it is. This must just be the pathway for small business owners. I've done everything I can. I paid my bills on time. I'll just wait someday, one day, I'll get the money, right? How long would it take to impact your business if I can share these secret set of rules for you? Only 60 days to get the capital to fund your business. It only takes 9 to 18 months to build your company's fundability score on that EIN, employment identification number that you got from the IRS. Once you get that there, now your company can access funding just like Wall Street, Walmart, Amazon, Google, Apple. What if you could have the same unfair advantage as them? It only takes a couple hours a month with a coach to get the job done. But what do we have to do as owners of our own companies? We got to take action. You got to be committed and you got to take action. So those are the things that we have learned working with business owners just like you. So your corporate veil, that shield of your company. So if you take a look at what that is there for, when you sign up to be in business, what do they tell you? Hey, if you get your EIN and you get your LLC, a limited liability corporation, if you get sued, as long as it's not unethical, they can come after all the business assets. They just can't touch my personal assets as the owner or the founder or the CEO of the company. Okay. They also said you could get all the funding that you needed. But when you guys go and all the money you deposit in your local banks, what happens? What happens to that? They always want what? A social security or a personal guarantee. It's not that your company doesn't have an EIN. You just haven't set it up with a score. All of you remember when you came out of high school? Could you buy a new car, a new home, and get a Visa card? It wasn't because you had bad credit. You just didn't have any credit. So anytime you write your social security number or you personally guarantee it, you're piercing that corporate veil holding your personal assets into funding the business, which puts your assets at risk. So we're going to talk about how to plug the holes and how to alleviate some of those risks that you guys are taking today to run your companies. So let's talk about this a little bit, right? So let's talk about your credit, keeping your SSN and EIN separated. We need to separate those because right now they're mingled, they're mixed together. You guys know here on the personal credit score, so this is some education. Some of you might be well-versed and said, hey, I already know this. Just like you can see up in the top hand of my score, you got those two arrows. The line in the middle is the wall. On the left side is your business. On the right side is your personal score. They shouldn't be combined. So your personal credit score, what happened when you got out of high school and you turned 18? Your Social Security number was automatically tracked by who? The 3 personal credit bureaus. You guys have all heard of TransUnion. They're the largest. You got Experian, you got Equifax. And your personal credit score goes from what? 0 to 850. When you get north of 800, that's a great credit score. A 650 and 680 is not a good credit score. It's fair. You won't get the access to capital and credit that you need. And then when you're leveraging your Social Security number to access money for your business, now when you need something on the personal side, you're going to pay higher rates where? On insurance, your own personal loans, your houses, and all of the things that you buy. So why do we have to do it this way? What happens if we shift over here? Let's look at the business credit score. So just think, when you came out of high school, your Social Security number was tracked automatically. You didn't have to sign up for TransUnion, Experian, or Equifax. They automatically tracked it. Why? There's over 4 million people that use their Social Security number to fund their personal lives and their businesses. On the business credit, it's not done automatically. It's done with intention. You actually have to sign up for it. The 3 business credit bureaus are Dun & Bradstreet. They're the largest, like TransUnion, right? Then you have Experian and Equifax commercial. There's a consumer division of those 2 credit bureaus, and there's a business division. And you have to apply for Dun & Bradstreet. Some of you may say, yeah, I remember applying for that before. If you do state or government contracts, you have to have a DUNS number. If you don't, they won't do business with you. So you might have it, but you just didn't know what to do with it. But it's the largest business credit bureau. And you can see your business's EIN score on your company goes from 0 to 100. When you get north of 80, it's a low risk. Now you start getting a credit line recommendation, like Walmart has access to over $50 billion. Do you think the CEO is personally guaranteeing for those loans to run Walmart? How do you think Walmart made it through the pandemic? How do you think all these guys continue to buy and build buildings? Because they've figured out how to unlock corporate credit. But they have what? CFOs, high-powered bankers in their back pockets. Think about all the big banks that are worldwide. Chase, Wells Fargo, Bank of America, PNC. These guys operate in a Wall Street space. So where you guys are depositing your money, they'll loan you money, but they're always going to ask for a personal guarantee. Your community banks, your credit unions, and capital venture groups will get you guys money on where you're at. You just won't get it from where you're probably housing your money, where your business account exists. So see the difference between these two? You've got this one, that's personal credit. This is your company's credit. They're locked in hands because you're using what? This to fund this. So it's kind of like, anybody have kids out there? My kids I've been an empty nester now for 2 years in September. Daughter got married last October. Dad's expenses. College is out of the way and only one daughter. Wedding's out of the way, right? But what happens? Dad had to co-sign for their cars. But what I told him is what? Don't mess it up. This is going to help build your credit score. Dad's only going to do this one time. But just imagine you continue to co-sign for your business. So you're not the CEO, you're the ATM. We're going to give you some information on how to do that better today. Okay? So think about this. What is business credit? I want to demystify that for you today. Business credit's not extended. It's extended to who? The business, your company, not you, the owner. I'll say that again. True business credit, I'm going to call it corporate credit, is extended to the business, not you, the owner. So now your company's EIN, that EIN is like the Social Security number of your company. It'll have its own credit score, and it'll have what? Its own report. And here's what's really cool. I'm going to show you some things here that's really going to knock the socks off of what you've probably been told. But there's a 7 steps. We've been doing this since 2007. If you don't do it in the right order, it's not like personal credit where it doesn't matter where you go. It's just going to continue to compound and help you or hurt you on your personal credit. There's a lot of things that go into building your personal credit score. There's only one factor in building your company's credit score, and it's just paying your bills on time. If you do this, we'll show you and light up the runway to get you up in the sky so your company now can access and have a credit line recommendation, have ready access capital credit at the same bank rates that the Wall Street companies are getting at. So stay tuned. You're going to want to listen to this, and feel free to take pictures of the screen. We can always set up things. We're going to have some information for you at the end. So here's step 1. It's called fundability. Remember that paydex score? That's a term used by Dun & Bradstreet. If you're at a 0 to 49, it's high risk. They're not giving you any money on the company. 50 to 79, you'll start getting some trade line accounts. When you get above 80, that's when you get corporate cards, not business cards, corporate cards that are tied to the EIN, report to the business credit bureaus with no personal guarantees. Okay? SBA loans. There's a thing called SBSS. It's a scoring factor. You probably heard it from your banks. That's a leverage between your personal credit and your company's credit score. If they're both great, you'll get the best interest rates and terms from an SBA. Okay? So fundability is what? Your business, your company, that EIN, its ability to get financing without you, the owner, so you can be the true CEO and owner of the company, not the ATM and the co-signer of the company. What are some of the factors that affect your fundability? These are the things that you want to write down, okay? So think about this. Your business name, the business address, it cannot be a P.O. box. I want to say that again. It cannot be a P.O. box. Why? Because you don't live in a post office box. That's just a generic address at not your primary residence, and it's not your business address. It's at a United States Postal Service or a mailbox, etc., or a UPS store. Those cannot be used. Can you use your home address as a business address? Yes, you can, to build corporate fundability. Why don't you want to use your home address? Because your personal credit, no one can look up your social security number and see where you live on your social security number, your personal credit. It's against the law. It's all blocked. Unless you're licensed and you're a bank, you can't get access to that info. Did you know that on your company's credit score on corporate funding, if you Google Jerry's Plumbing and you put your home address down on there, guess what's going to happen? The entire world now will know where you live and where you and your family live and sleep at night. You can use it, but you want to separate it, because if you put that out there, when you Google it, your business address is listed everywhere, which is your home. You can, but that's the only reason why you wouldn't want to. Even though if you got a Pit Bull and a Smith & Wesson, you still want to keep your address off, but you can. It just can't be a P.O. box. Your entity type, you got to have an EIN. You got to be an LLC. Got to be filed and listed with the Secretary of State and the IRS. You have to have a business phone number. A cell phone number won't work. How many have heard of 411 National Directory? Remember back in the 90s, 80s, and 90s when we went to a payphone and typed in what? 411, and they say, what business? And you say Guardian Chamber, and they say, hang on one second while I connect you. Do you know if your, can't be a cell phone number, your business phone number, your landline, or your VoIP, voice over IP address, that's a digital line that links up and you can push those numbers to your cell phones, because everybody uses cell phones today. If it's not listed with 401 National Directory, it's an automatic decline for vendors and lenders. You have to have a website. You have to have an email that matches. It can't be jerry.jerrysplumbing@gmail.com, at yahoo.com, at hotmail.com. It has to be jerry@jerrysplumbing.com. It has to match your website. Business licenses, if applicable, it all varies by county and state. You got to have a business bank account on your EIN. And you've got to have a merchant account, which is credit card processing, like a Stripe, or if you've got, there's a ton of them out there. You have Stripe, you've got HMS, there's all kinds of them that are out there that you guys can get. Those are the fundamental foundations. If these aren't put into play, they're always going to look back at you personally as the owner to back up the funding for your company. You got to get all these things in. So they're like, hey, some of this stuff costs money. Yeah. You don't, do you think a corporate lender and vendor is going to give your company money if it looks like it's a side hustle out of a basement with an Gmail account, the address is a P.O. box? They're just not going to take the risk. Why? Remember, 75% of small businesses fail in less than 15 years. So they know the risk. So if you don't look like a real business, they're not going to fund and take the risk on you. So that's why you've got to get these factors in alignment. Okay. So once again, I want to make sure you guys are seeing this, right? So you have to establish reports with the big three credit bureaus, not personal, not TransUnion, Experian, Equifax, Consumer, Dun & Bradstreet. That's the only one you have to apply for intentionally. Then your Experian, Equifax, you'll get those when you use a vendor or lender that reports to those business credit bureaus. And your company information has to match everywhere. So when you fill out your credit report, they have to match the Secretary of State. They have to match the IRS. All of those 5 entities need to be congruent. And then now you can start what? Building your company's credit score. So here's the last thing that I'm going to share with you guys, right? So step 3 through 7, and what we found and done a great job for business owners just like you, is you have to find vendors that report. Only 10% of them report your on-time payments to Dun & Bradstreet, Experian, Equifax Commercial. Then once you apply, you must use those and pay those early and on time at the latest. Your personal credit, you can have up to what? 29 days. You can make all your payments 29 days late, and it doesn't affect your personal credit score. As soon as you hit 30, it does. I'm not recommending you pay your bills late because you're going to pay fines and fees and penalties. And you're going to pay higher interest rates on cards when you miss the on-time payment. So don't do that. But it's not like that. It's all you have to do to build EIN, your company's credit score, is use vendors that report to the big three, pay those bills on time, if not early. You'll start out with what? Trade line accounts. Remember when you came out of high school? Okay, you either had to have a cosigner or you had to go to a retailer. I remember when I applied to Sears and Roebuck and they turned me down. I love Sears because they had tires, they changed oil, they had clothes, they had weights, they had home equipment. I thought this is going to be great. My first credit card was Fashion Bug, which is like a small boutique clothing store for kids. My second was JCPenney, and I bought 4 tires on 90-day same as cash from a company called American General. My parents' credit score was horrible, so they couldn't help me out with that. So just remember, when you started out, it's not because I had bad credit, but you can't get credit unless your company has credit. So just know you'll start out with net accounts like net 7, net 15, net 30 accounts. You'll use it, pay those on time. As you build that track record of paying payments on time, you'll start unlocking doors to build your company's credit score, right? You've got to have at least 8 vendors reporting, and this will do it quickly. This is not like personal credit, which takes forever. How many of you have an over 800 score now? If you're a business owner, probably not very many of you. It's not because you're doing anything wrong, paying all your bills on time. You're just leveraging your personal credit to manage your personal life and your business. And that debt to income, your guys' utilization is too high. It's over 30%. You're paying your bills on time, but you're taking your credit card balances above 30%. And then, all the other things that goes along with personal credit. Once you start doing this and you use these vendors and lenders and you pay them on time, it only takes about 9 to 18 months to get you that 800 fundability score. So now your company can now unlock and be the financial legs underneath your company without you, the owner, co-signing or leveraging your personal assets. And you can see down here below me, these are the type of lenders and vendors that report to the credit bureaus. It's not the whole list, but it's a lot of them that do. So you'll recognize there's a lot that do, but there's a lot that don't. That'll be your biggest challenge. Okay. So let's talk a little bit about the benefits again, just to recap what we talked about. Approval regardless of your personal credit score. No personal guarantees for a lot of what you're going to need to run your companies. No consumer credit inquiries, and you're going to get 10 times the amount of capital. Here's a nugget for you. SBA and all businesses, based on the history of people being in business by themselves, you need at least 3 times the amount of capital. Have access to that, not debt, ready access capital credit to survive storms and to grow and scale. So if you know how much money it takes to run your business monthly, you have to take that times 3. I'm going to take it times 10. Do you have that available to run your business? The SBA is going to tell you that you're going to get credit limits that are 10 times plus. I've had some that are 50 times than they'll ever get with them on their using their personal social security number or personal guarantees or personal assets. You'll get this quickly over the next 12 to 18 months on your EIN. Your SSN takes a lot longer. So all this is using vendors that report, paying your bills on time, using them often. It just fuels your company's credit score and it grows your credit line recommendation. Scores are all based on one thing, not utilization, not debt to income, how many applications you apply for, and what's your personal credit. It's all about you using and paying your bills on time. Now, You'll be able to separate your personal credit from your business credit. You've established fundability that you can use and pay on time, which now in the next 9 to 12 months, you'll get corporate card, you'll get SBA loans, you'll get term loans, you'll get things to really fuel vehicle equipment. And the rates are 0 to 5%. That's what the rates are today. How many would like to buy your equipment vehicles at 1.9 to 3%? I do that all day. Banks and Wall Street are leveraging the money from the banks at lower rates and terms because what you can't pay is why. You can't pay those high interest base. You may have a loan at the bank that's sitting there, but you don't want to use it because it might be a 12 to 15% loan or higher if it's a credit card. Okay? So based on what we're talking about today, how would all of you that are watching and listening, they'd like to build financial stability for your company without you writing it off or signing it off, right? Build credit on your company's EIN, that number you got, the tax number you got from the IRS. You're having that to pay taxes. Let's fuel your company's what? Access to capital and credit, getting the bank's money at the best interest rates and terms to help you grow and scale, survive those storms, and do that and take your profit instead of dumping it back in the business, putting those into vehicles that earn you 7 to 15%. That's how you plan for your exit strategy. So get the facts. I would like to have the facts in your industry. It's a lonely island. Anybody agree with that? If you're a business owner, how many of you feel it's lonely? You're kind of doing it all on your own. Well, we don't want you to do that. We want to get you the facts to grow your company with confidence based on the facts in your industry, so you have the facts to do the things that you need to grow. So why? Jerry, I'm doing fine. I've been blessed. I've been in business for 20 years. I've got all the cash I need. I'm putting cash away, and I'm just using the cash in my business to fuel it. I don't want loans because it's debt. Well, I understand that. What I'm showing you, if you guys go to bankrate.com, this is not anything, no magic trick. This is a loan. If you took a $100,000 business loan, it was 10% for 60 months, which is 5 years. It would cost you $2,124.70 for 60 months. Now you're saying it's only a 10% loan. Over that term of 60 months, you're going to pay 27.5, not 10%, because it's amortized interest. It's called a 10% APR, annual percentage rate. So you can see down at the bottom where it says September, you see where it says payment is $2,124.70, principal is $1,291.37, interest is $833.33. If you take that number, it's going to be 39% on your first payment. It's front loaded. The only time you pay the 10% is in the last year of the loan. So I want to make sure you guys understand that. So why do this? Why get access? I wouldn't do this either. Some of you aren't making 27% profit. And if you were 30%, you wouldn't want to give it to the banks, would you? So how can you do it in a better way? You have to get your EIN fundable. So now you get your rate down into 5%. See the difference? 1887.12, and you're going to pay 13.2. So here's the savings over here on this side of me. You're going to save $237 a month. So when you access the money, you're going to save $237 or $14,220 a year. You're also going to pay $14,255 less in interest. So just this one loan, you save $28,475 by building EIN fundability. Now that's a game changer. What could you do with $28,475? So we just want to make sure that you understand the power of EIN fundability to help you all get access to it on your company without you, the owner. The solution that we provide is our fundability platform, getting your company in the best position to be fully fundable on its own, right? That you get the best interest rates from the banks, that 0 to 5, best terms, extended loans, getting out of MCAs, getting out of credit card stacking, getting corporate cards that give you 0% for 12 to 18 months. Would you rather use your money for free or the bank's money for free and still get rewards? That's the difference, right? You got business credit cards, but they're on you. They may not be reporting your personal credit, but they're personally guaranteed, and they don't report to the business credit bureaus. Corporate cards do. Cash flow mapping, understanding your debt capacity as you invest in your company or grow your company, add an employee, cut somebody, take on a job. Are you putting yourself in the best position, or are you taking a gamble on a marketing program that could put you in debt, which is really the number one reason why businesses fail in that first 5 years? They get into debt trouble, expense trouble. Business valuations. How many of you know what your houses are worth? Your cars are worth? Well, a business valuation on your company, if you haven't done that, it's not a projector from a business coach or a bank. Those are risk indicators. That is not a true business valuation. A valuation should be at least 29 pages that shows you the 4 values of your company, so you know for sure what it's worth, so you can plan for your exit strategy, or if you're going to pass it down to a loved one, okay, add it to an estate, you can do that. It'll also give you your key performance indicators in your industry where you're above average, average, and below average, so you can focus your time and energy on growing those areas that are low to do what? Improve the value of your company, right? So you know if somebody wants to buy it, you'll know exactly what it's worth, just like your home. You wouldn't buy a home without a what? Appraisal. If you haven't had one done, 98% of business owners haven't had a business valuation done. Okay, those are things that will help you prepare for your business strategy and know where to spend your time and money to grow the asset, to put together the right plan to grow your asset. And then last thing, we help you with capital and credit now, because building your EI and credit is going to take you what? 18 to 36 months to get you in a better place to untether you from all those personal guarantees and those business credit cards and loans you might have and all the vehicles and equipment that you have and put it on your company, taking yourself out of the picture. But we can help you get access to capital and credit now through our 12-point check system, so you don't keep getting lower amounts or you just can't get the funding to get your business up and rolling for the rest of this year and preparing for the next year. Those are things that we can help you guys out with by being part of the Louisville SBDC. This is our platform that we use, all the things that we talked about here. It tells you exactly how many things you have reporting to each credit bureau. It's an intuitive system, so we use technology. And then we talk about the foundation, and here's the wheel. These are the things, the 5 things that you have to get in alignment. There's 125 factors that go into play for you can get access to capital and eventually have your company be fundable on its own. So you, the owner, are no longer the ATM. You're truly the CEO to grow and beyond your business and free up time to be able to invest in those other systems or other partners to do your other things in your company, so you can focus on what you're best at, whether it's plumbing or real estate or HVAC or construction or consulting, whatever business that you're in. Cash flow mapping, this is not a replacement for QuickBooks. This is to improve your financial forecasting, even on jobs that you may be doing a state bid. Control your variable expense, which is really the only expense you can control, on a 1-page document. Anybody ever seen a P&L report? I get those all the time from my 5 companies. Let me tell you, I just go to the bottom line. But by the time you see it, those are history reports. It's in the past. By the time you see it, it's too late. This allows you to see where your money's going, so you can make the chances, or if you're going to add people, or you're going to try to cut something, or you want to buy equipment, what's that going to do to my current cash flow? Your job is not to lower cash flow on the hopes that you get back to there on a risk. It's, hey, what about a reinvestment account? What's my variable expenses? What are the things that I need to be aware of as an owner of a company to make sure I don't get into cash flow trouble? Because that's the #1 reason why businesses have to close their doors. Business valuations, know the value of your company, get the facts to make sound decisions to grow and invest in your company and put your people into place. But it's better positioning. If you don't have the facts on this, just like your home, putting an in-ground pool in the backyard is not an increase in value. It actually takes 50%. They're looking at your home out of the equation if they have small kids and small pets, because they see it as a graveyard. Okay. Your exit strategy, if investor tries to buy it, they're going to buy it for lower than what it's worth. Okay. Insurance coverage, that's super important. You're not overpaying or underinsuring, or not have something that's insured that's a valuable asset in your company. And then getting those key performance indicators you see here to know where the purple is at, so you can focus on these. Don't lose track of what you're good at, but get the facts on where you're going to invest your time and money to grow your organization. And then you get the insurance, what you need for buy-sell agreements, key person, property and casualty. So you know exactly when you go to an insurance person, how much do you do? They have a calculation to look at your property, but everything else that you're insuring, do you have the proper amount of insurance in case something bad happens? We don't have insurance because we want to use it. But where we find it's bad is we didn't really look into it. It's been 20 years since I evaluated it. My company's grown and I'm not properly protected. So we do this for our business owners on an annual basis, because it's important to know what those facts are. Okay. So I want to thank you for your time today. Sean King is in Kentucky to answer your questions. But if you'd like to see your company's credit score today and kind of what you look like to the IRS and Secretary of State on funding, we're offering that. That's a $50 value if you went and bought it yourself. We run credit safe reports so you can see where you're at with the IRS, where you can see where you're at with the Secretary of State, and what your company's credit score is and what your fundability is on your credit line recommendations, so you can get the true facts. And we'd like to offer that to you by being Involved with the SBDC. That's something we can evolve in. You can see Sean's number there. That's his, you can send him a text at that 586-201-5927, or you can send him an email at sking@guardianchamber.com, or you can get a hold of Janet and let her know as well, and we're happy to take care of you through the SBDC. So that's what I have. I can leave it now for questions, Janet, if there's any for me to answer that's come in during our presentation today.
I haven't seen any yet, so we're just going to leave that up there in the chat. And Dave is trying to, he had to step away from it. He's trying to reconnect with us to do some follow-up questions. Are there scenario where like a small business owner might have an issue when they have their own personal credit starting a business, and and that's on the low side? Will that affect them in trying to get with these vendors who, to build the business side credit?
It can. You just got to get it cleaned up. But if you've had some late payments, it doesn't take a lot of time if you just make your next couple payments on time. So, for example, Uline's one of the ones that you'll get a 30-day net on. So if you had it, you paid a couple late, all you have to do is just buy $50 and something, pay it off right then and there, pay it on time, and then you'll see that your credit score, that stuff will move off from yellow and get back in the green. So it's really easy to get it replaced quickly. It doesn't take years. Like personal credit, your score drops 20 points and may take you a year or two to get that back to normal. It's not like that on your EIN score. So good question.
Okay. And the credit score is similar to what we see in personal credit score. So like 800. I mean,
Well,
those
that's
numbers are similar.
fundability. That's fundability. With
Fundability.
Dun & Bradstreet and Experian, it's going to go 0 to 100. You get north of 80. And then when you get to Experian, you got to get above a 650. So there's three different scoring. That fundability score of 800 is looking at your personal credit, because our goal is when we untether business owners from the personal side of things, guess what happens to the personal owner's personal credit score? Because now you're not using business credit cards, which are personal credit cards, right? Now you're untethering, you're using corporate cards. You've got loans. If you have vehicles, within 9 to 10 months, we'll get those put on with Ally Finance that reports to the credit bureaus. Now it's off you. So when you reduce your debt to income utilization on your personal side, then that moves up your thing. So we'll just untether yours from that. But it's going to take 12 to 18 months for us to get that game started. So just know that's a journey, but if you need access to capital and credit, we can help you out with that too. So we help business owners out where they're at today. I'm not here to dig a hole and then get them out of that. But we want to provide education. We can even give you a free ebook to show you how to do it on your own. I think it'll take you 5 to 7 years to do it on your own. With our services and through the SBDC, we can get an owner there in 9 to 18 months. Okay. Good question. Any questions that came through?
No, don't see anything. I mean, folks are still here engaged and everything.
Sean, any comments from you, Sean? Anything that you'd like to share? But I'm letting you guys know that we've saved an owner just the other day. When you look at getting him financed, he had a bunch of trucks. He had 3 trucks. He just bought his 4th one. He got that financed for 24%. Because at home, he has 1 car finance. He had 3 trucks financed. He needed a 4th one to grow his business. So when he went to it, it's going to cost 24% in interest. So that was like paying 57%. So within 7 months, we got in his company's credit score built. So now we were able to move that truck from a 24% interest to a 1.9, saving him $12,000 in interest and payments just his first year. So that's the power of EIN credit. It's nothing magical. It's intentional. It's like going to the gym. So if you think you're going to start working on this and it's automatically going to report, it doesn't. You have to, it's like a gym. You can go pay $200 a month for a LA Fitness gym membership, but if you never go, are you going to get 6-pack abs and get physically fit? You're not going to get financially fit for your company so you can be the true CEO and beyond the business unless you're willing to put those 2 to 3 hours a month into doing that. And a lot of that's using the vendors and paying them on time. So banks are really good about moving cash flow around. They don't just mess with one account. They have lots of accounts, but they're constantly moving cash around to earn money. We're here to show you how to do the same thing so you can do what? Take advantage of those Wall Street corporation methodologies, take advantage of taxes, pay less in taxes, get the financing at the best rate terms for your company so you can do more of the things that you want to do, open up more companies, fuel that, hire more people, get access to the capital without all the risk, because most of you are getting to where you hit a brick wall. The banks only give you so much money. You're doing everything right, but you just can't. You just think, well, that's just the way it is. It's not. We can show you how to. I can't change the way corporate funding works, but we can show you exactly the secrets and how to play the game. And that's what we wanted to share with you. And I can't thank you enough, Janet, for inviting us on this to get this information out to small business owners throughout Kentucky and all over the country. But Sean, anything that you'd like to share with the folks?
I think you pretty much hit the nail on the head. I mean, I tell people, everybody I sit down with, this isn't used very often for three main reasons. It's not a difficult process, but it's not done often for three main reasons. One, there's very, very little information out there about it. The banks have been running this country for 200 years. Every time you drive into a new city, the biggest building you're going to see is a bank. They want to give you money at 20%, not 10%, or 15%, not 5%, whatever the case may be. Two, it's a methodical process, not a difficult one. Can be a little tedious, but it's not hard. You just have to do it intentionally. If you don't ever want to intentionally make yourself look fundable, there are some things that you can stumble over and gain access to small amounts of capital, but you're never going to get anything significant unless you intentionally want to do this. And three, you have to do business with the right people and have the right accounts with the right people. I mean, even Home Depot and Lowe's have different level of accounts. They have business accounts, they have corporate accounts. And if you go in there and you ask for a business account, you don't supply your EIN, you may get a business account, but it's going to be personally guaranteed. Lenders and vendors aren't advertising that we will give you corporate level accounts that's not tethered to you. They don't advertise those things because everybody wants a personal guarantee. They are more than happy to accept it from you. So that's the only thing I'll add, Jerry. I think you did a wonderful job. I appreciate you being on here. Why not start at the top when we're going to do a webinar, right? So that's why I brought in the heavy hitter. So thank you for your time, Jerry. I really appreciate it.
No, I appreciate what all of you are doing. I really appreciate it. Main Street business owners are the backbone of this country. We're employing more people, you hire more people, you support the local communities, making it a better place to live. And I know there's a war against you through the banks and different vehicles that are out there that are stopping you do that. And you can't pay those 10, 15, 20, 24, 29% credit cards because those interest rates are 90%. If you didn't know that, your credit card statement, take my word for it, look at your credit card statement. And if you have an $8,000 balance on a 24.99% credit card, you're paying 92% of interest if you're just making your minimum payment. So we're going to help you untether that and transfer, not a balance transfer, move it over to a corporate card, but just know that it's going to take you 9 months of due diligence, but only a couple. I didn't say 2 hours a day or 2 hours a week. I said 3 hours a month, but we got a coach that work. And Sean is very passionate, obviously serving his country. He loves what he does and he does what he says. So if we can help you out, we're high in integrity. We're here to support you. We're here to get you information, whether you want to do it on your own. Some of you may not be in a place to, be able to embark on this service now, but we still want you to set up your foundation and it will impact you whether you're using this or not. But you got to do what? You got to commit and you got to take action today. Because if you don't, what happens? Some of you might be looking at me on the screen going, hey, I'm in trouble and the banks won't help me. Well, a loan's not always the best answer. Maybe you got some bad loans. I can help you get down to better interest rates. So we can help you out with all kinds of levels. You're just going to have to, we do free consultations to see where you're at, seeing what advantages that we can possibly, solutions we can give to you. So if you are in need or you're looking to expand or grow and you keep getting told no, reach out to Sean. All it takes is a conversation, a little bit of time, and it can save you a lot in interest and fuel the dream that you set up when you started as a business owner here in this great country we live in. So that's all I have. I want to wish you all a very safe and healthy and prosperous year. And if we can be of any help, I want to thank the SBDC again in Louisville for this opportunity. And it's been a pleasure to spend some time with you guys today.
Thank you guys both. We put in the chat the contact information for Sean. So you guys can follow up. Sometimes folks aren't seeing the actual presentation because they're on a mobile device or something like that. So we put that in the chat so they can see that. We'll have the recording available. We'll send that out to everyone so that they can follow back up and see that in the future. Also, folks, stick around. We have a short evaluation that pops up when we close out. We want to thank you guys both. Sorry, Dave couldn't make it back in. But we thank you guys very much. And we'll look forward to seeing everyone on another Toolkit Tuesday. Thank you, guys.
Thank you, Janet.